Hi, my name is Grant Zielinski. I'm a certified divorce financial analyst from Divorce Financial Solutions in Milwaukee, Wisconsin. I am a financial specialist, and I help clients and their attorneys really talk through the financial issues related to divorce. One of the main focuses in your divorce is going to be revolving around your property, and one of the meetings that we often have is a meeting to go through and basically establish a foundation of the assets and liabilities that you have. This is a property division worksheet, which is a spreadsheet that we use to help us kind of on a one-page view all of the different assets in different groups. And it also allows us to start looking at allocation and division or potential division of your assets. So this is one tool that we use as we walk through that typical first meeting. And you can see when we go through this, there's property worksheet with different groups. And that's purposeful so that we can talk about these groups and how they work in divorce. So things like your cash and deposit accounts, we can figure out how they're titled, which is this first column here. I have an H and a W for husband and wife. We can figure out what accounts exist and what value we have on certain accounts. And that allows us, again, to talk through how they have been used in the past, how they're going to be used going forward, how we're going to either change the title or potentially close or open new accounts. So we can walk through that in great detail, looking at the options that are available within your process. Qualified assets is very common discussion. We go through these line by line and look at, again, the valuation process. In some cases, you may have qualified assets that are very easy to determine the value. Some things like IRAs, 401ks, 403bs, you can look at an account statement and kind of see what that value is on a given date. Some assets, qualified assets, may be more difficult, things like pensions. I have an example here, U.S. Coast Guard pension. We would talk in detail about how that valuation process works, what the valuation assumptions are, when does the payment start, how much is the monthly payment, and for how long may that payment be received. Those are all assumptions that go into establishing a value. And we'd also talk about options of division of your retirement assets. So IRAs, 401ks, all of those things that can be divided in divorce. And we'll walk through the process to do that. The tax implications of certain assets, and look at both parties' goals and interests to see if there's a reasonable way to divide certain assets in a manner that can meet both parties' needs. So these are things that we would walk through in a traditional meeting and go through and kind of discuss the different maybe even disagreements or issues that arise and brainstorm some options to move us past any impasse or disagreement around values. There's a lot of things that we can use, or people we can use as resources to help us get past some of those issues. An example might be real estate. There might be a difference in what you assume or want to value your home at. And there's many ways to get past that. People can come to an agreement just by maybe negotiation. Maybe there's a need to go get out an outside appraisal. Maybe you can go get a market analysis or multiple to figure out a good way to value a home. And we'll talk about those options. We'll talk about the ways that we can get past some of those barriers or get more information if needed around certain assets and their values. The same thing that we talk about, we'll go through and discuss debts. Debts is a very common issue, I guess, when we're going through a divorce. We can look at different ways to eliminate debts. Are there ways that maybe we can use your assets to either pay down or eliminate debts? And if so, what are the costs to doing that? What is the tax implication of taking a distribution from your 401k or taking a distribution from some of your cash assets to pay off debts or to reduce your debt load? Refinancing mortgages, we'll talk about that process and go through what those options are, what those limits may be, and things to consider when talking about refinancing. And in some cases, identify if there's any barriers to prevent one party from the ability to refinance. So those are all things that we go through and we discuss in a traditional financial meeting. And it's really, in summary, it's an informational meeting. It's not a meeting that we'd go through and provide advice. It wouldn't be a, you should do this, or this is what your division should look like. This is a meeting that would identify and value certain assets, identify if there's any disagreements, and look at ways to get past those disagreements, whether that's outside resources or by negotiation or getting more information. And then we'd look at this property worksheet as kind of a foundation that both parties can then use to start looking at how to allocate those assets and divide their property. And this is kind of a working document. So as you go through your divorce process, you'll be coming back and updating certain values. Typically, we'd look at a common valuation date. So you might pick, a date closer to your date of divorce to revalue all of your assets so that we have kind of a common division date or valuation date for most of your assets. So this is something that we establish in the beginning to create a foundation of what we're going to work with, kind of a working spreadsheet as we go through the process that helps us analyze different options for both parties. One of the things that we commonly get engaged to discuss is the division of income and really the calculation of support, both child support and maintenance. This calculator, which we call tax calc, is a tool that we use in Wisconsin to try to determine what the after-tax income would be for two parties post-divorce. It's that after-tax income that we're really trying to compare in Wisconsin to see if there is a support or a need for support or a transfer of income from one side to another. This program is one that all of the judges in Wisconsin have. They've been trained and use this program. It's available right on their dashboard. So it's something that really in any case we use to kind of illustrate to the judge and to the court what the child support would be, as well as what different maintenance calculations would look like. In its very basic form, this is a side-by-side tax return. So this helps us very accurately calculate parties who used to file as married joint, now filing as separate individuals. This shows us what they would be taxed and how their income would be taxed. In 2018, we have maintenance, which is tax deductible to the payor and taxable as income for the person receiving it, the payee. So that is one thing that this program helps us do and calculate the different tax impacts of maintenance. And there's a lot of actual tax credits and child-related tax benefits that this program helps us capture. One of the biggest concerns for most people are looking at how am I going to make ends meet post-divorce? How much money am I going to have on a monthly basis? And that's really what this helps us illustrate. If you look at an example here with just basic info put in, I have here two clients. One makes $120,000, one makes $300,000, and we can plug in that information and get a very accurate tax calculation on the bottom. And you can see here in the middle on a monthly basis what that would leave each party. And this is really the income that we would compare to the expenses and to the budget to make sure that these are scenarios that make sense for both parties, that we're not putting a party in a scenario where they can't make ends meet. In some cases, this is also where we find out there may not be enough money to make our budgets. And in those cases, we're looking at trying to make a division that makes sense and can be agreeable to two parties. So this gives us a lot of information in terms of how the income comes into the family, how the taxes would be allocated, and then what money is left over after tax. This is a calculator that we use to also calculate child support. So it's something that when we enter in the child information, we can really quickly calculate guideline child support. And based on differences in placement or changes in income, we can easily calculate different child support calculations. So This is a kind of an all-inclusive calculator that allows us to discuss the division of income and the potential maintenance calculations that may exist in certain cases. So one of the more important inputs in the tax calc program is the income and capturing the income accurately. So when we go through this, we want to try and get an accurate calculation of one's annual income, and what this allows us to do with that is calculate child support based on that income and based on those different placement scenarios. So for example, if I was to enter in equal placement for 4 children, this program allows us to equally or easily calculate child support and bring that information into our calculation program. In doing so, we can figure out what the change in the monthly income is for both parties with that child support calculation and determine whether or not there's maintenance needed. So generally speaking, this program helps us first calculate what the child support would look like, and then after child support, we determine and look at the monthly incomes for each party and see if there's further support necessary. That's what we call maintenance or alimony. And those are certainly a number of options that are available to you when you get to that point. Very creative options of looking at certain amounts for certain periods of time. You might have higher amounts for a shorter period of time, lower amounts for a longer period of time. You may have the ability to use property and other issues in your divorce to offset or lower either the amount or the duration. But those are all options that we would talk about, and we use this calculator to help us work through those and illustrate those different options for you. One of the discussions that we often come across in discussions around maintenance or alimony is the potential to use other assets or property to offset any maintenance obligation. So in other words, we might calculate that an equal division of income might result in a $500 per month maintenance payment. And we might say, well, instead of making that payment, is there other ways that we can provide that value? Is there other sources that we can pay that from? And one of the very common calculations that we would do is something that we call a maintenance buyout. And that's really a term we use to say that we're going to use assets and provide that asset in lieu of any sort of ongoing maintenance payment. So in my example, if we were to look at a $500 a month payment, and let's say, for example, that would be for 10 years, what this program and calculator helps us do is value that future stream of income. What is $500 a month for 10 years worth today if we were going to transfer that in terms of property instead? And this is a calculator that helps us do that. So we would go through a number of different calculations. There's obviously a number of different assumptions we can include. But generally speaking, this is a present value type calculator that says 10 years of payments, monthly payments at $500 per month. This helps us say, well, roughly that's worth about $39,000 in cash today. And that allows us to go back to a property worksheet or look at different assets you may have and see if there's other ways to provide that value in lieu of the monthly payment. Again, that's referred to as a buyout, but there are other options that this calculator helps us to consider. There's some things that we call a buy down. So you could either look at buying the later part of the duration. So you might say, well, instead of buying out the entire 10 years, why don't we buy out the last 5 years? And again, that allows us to take a look at the value of those later 5 years. So we might have zero buyout for 60 months and then $500 for the last 5 years and look at the value of that. That's something that we refer to as a partial buyout. So these are all things that we can look at to either reduce the term or reduce the amount by looking at using assets or property to offset any sort of maintenance obligation. It is a discussion that comes up quite a bit. A lot of people have some value in being done, kind of having some finality. And if you have some value in that finality, these are options and things that we go through to discuss what those would look like and give you different approaches to having that finality, which would include a buyout or a buy down of maintenance. This spreadsheet that we're looking at right now is what we call a wage stub calculator. And this is a calculator I created really to help clients and attorneys take their income and reduce it into a per month calculation. And the reason is that we like to look at income on a per month basis. Your financial disclosure statement asks you for your income on a per month basis. And because we all don't get paid on a month-to-month basis, this helps us take a wage stub and calculate the per month amounts. It's really important when we have this to be as accurate as we can because it's those per month amounts that we're using in the rest of our negotiations to calculate support, to calculate child support, to determine whether or not you have enough income on a monthly basis to meet your needs. So this calculation really helps us take a year-to-date pay stub and calculate, reduce it down to a per-month period. So, for example, if we had someone who just received a pay stub and the last one they received was February 1st of 2018, we can put in there, that's the pay period end date, and they get paid bi-weekly. That's what that B means. But this allows us to say, well, we know they've received 3 paychecks. So when we go in and enter in the year-to-date information that is on their pay stub, again, this allows us to reduce it down into a per-month number. So it quickly and easily allows us to get very accurate month-to-month income. And this is a calculator to help us do so. An additional benefit the wage stub provides, the wage stub calculator provides, is it allows us to take deductions that may not be regular. You may have a deduction that is every other pay period or something along those lines. And again, your pay stub on a every 2-week basis or a weekly basis may not actually reflect the exact same on each pay period. So this is one of those calculators that, again, allows us to kind of see past what you'll see on one pay stub and use your year-to-date information so we can kind of average it over a month-to-month period. So it is helpful in reducing down, the inconsistencies from a pay period to a pay period and really taking a global look at what you're getting paid so that we can get an accurate month-to-month picture. This calculator that we're looking at now is a temporary support calculator that I've created to help attorneys and clients divide up income during a temporary basis or kind of a pre-divorce period. This allows us to take a look at the current money or the current wages or income coming into the family and looking at the current federal and state withholdings, Medicare, Social Security deductions, any other deductions and pre-tax payroll deductions for us to get an accurate picture of what the true net income is on a temporary basis. And that allows us to take a look at how that net income would be divided. This calculator allows us to put in must-pay debts or debts that you want to consider, who's going to be paying those debts, and kind of easily and quickly calculates the amount of support or temporary support necessary to get to a desired result. In its simplest form, this kind of nails down a month-to-month net income and then helps us divide that month-to-month income in a way that seems fair and reasonable to 2 parties. This calculator does not factor in real or actual tax. This is factoring in what your current withholdings and what your current tax withholdings are on your pay stub. So this is a realistic picture of what's happening now, not a projection of what it will look like post-divorce. And that's why we call it a temporary calculator, because it's really looking at how are we going to divide the income on a pre-divorce basis that allows us to get through this temporary period and focus more on the big picture and what the division of income will look like on a post-divorce basis. So this is a temporary calculator that we sometimes use in helping clients and attorneys really put some rules or temporary agreements in place to allow parties to function prior to their divorce. This is a calculator that we call a coverture fraction. It's actually very simple. It's a number of days type calculator. It's often used when trying to determine a premarital component or a marital component of either a retirement plan or any other type of asset. But it's simply looking at the number of days during the marital period and dividing that into the number of days of the total period. And again, a common example of that would be someone who may have a pension and they've been married here for 16 years, 16.39 years, but they have 21.9 years of service in the plan. This calculator helps us determine what the marital percentage is. So often when we're looking for premarital or marital calculations, it's important for us to have these dates. If you can provide statements as of the date of marriage or as of the date of divorce, it allows us to put this calculator together and determine an accurate marital portion. So this is one calculator that we use often to establish a marital portion of certain assets. This is a calculator that we call Alimony Recapture that helps us quantify any tax consequence of certain maintenance or alimony agreements. This is a little known rule, IRS rule, that prevents front loading of maintenance. And in the very basic explanation, if your maintenance terminates or changes within the first 3 years, we use this calculator to determine if there is any recapture or additional tax in the 3rd year. This is just one example of certain tax issues that I would get involved with to help analyze and make sure that we're not running afoul of any IRS rules. This is a very common one, and I built this calculator to help us quickly calculate if there is any negative tax impact of certain maintenance agreements. A lot of times we're talking about creativity and looking at different ways to accomplish both parties' goals and needs. And in that case, we may be changing or reducing alimony in the first 3 years. We can certainly do that, but we want to make sure we don't incur any additional tax due to the alimony recapture rules. So this is a simple calculator that allows us to calculate that impact and make sure our creativity does not create any undue taxes or unnecessary taxes for the parties. This is a loan amortization calculator that we often use in the discussion around property. One of the more common reasons we run these calculations is to take a look at the cost or the actual monthly payment based on a loan amount. One of the discussions where this comes up is if we talk about who would be keeping the marital home and what the other spouse would be looking at in terms of setting up an additional residence. Many times people are looking at buying or purchasing, and this helps us easily and quickly calculate what type of loan and this monthly payment that they would be looking at. So we can kind of do a little affordability test right during our meeting and take a look at what type of a loan may be feasible based on current interest rates and the potential loan amount. Take a look at the monthly payment and what that would mean in terms of a monthly income, or what that would need in terms of a monthly income to qualify for a certain loan. So this is a simple calculator that helps us run, and certainly we can use it in many different cases or scenarios, but it helps us take a look at the impact of a loan and an amortization over a period of time. One of the other common reasons we use this would be to establish some sort of property buyout or buyout over time. I've used this calculator to take a look at a payment schedule for one spouse to the other if it was going to be made over 2, 3, 4, 5 years. If we include interest or not, we can look at what those payments would be if we wanted to buy out or buy down certain divisions or equalizations around property or maintenance. So there's a lot of useful tools and useful things that we can do with this calculator, and it really helps us be creative in trying to figure out the best way to divide up property and income.